Hi everyone and welcome back to the S&P Saga, your weekly recap of the S&P 500 index. This week was highly influenced by the Fed's decision to further lower their target fund rate by 25 basis points.
At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision.
This reduced the performance of the index back to the same level it was after 246 days in 2023. We'll reveal the winners and losers that drove the index performance and changes to the index. As usual, don't forget to subscribe to understand how individual stocks impact the S&P 500. Let's jump right into this week's review. The S&P 500 closed the week at $5,930.85, down 2% from last week and losing $1.3 trillion of market cap. The P/E ratio, based on current price and latest earnings, stands at 30.29, down 0.69 points since last week. Let's go to your gainers. Apple is up $96.1 billion or 2.6% on no specific news. Alphabet or Google up $19.3 billion or 0.8% on no specific news as well. NVDA up $11 billion or 0.3% on no notable news. Palantir up $10.2 billion or 5.9% after announcing a $600 million contract extension with the US Army. Accenture up $6 billion or 2.5% on better than expected revenue and earnings guidance provided. Boeing is up $5.8 billion or 4.6% after announcing that they resumed production following labor disruptions and announcing the award of a $36 billion deal with Pegasus Airlines. Visa up $5.7 billion or 0.9% on no specific news. Pfizer up $4.4 billion or 3% as the company provided a 2025 earnings guidance in line with analyst estimates. ABBV up $3.9 billion or 1.3% on no specific news. And finally, Bristol Myers Squibb up $3.2 billion or 2.8% on no specific news as well. Moving on to your losers. Meta is down $88.6 billion or 5.7% on no specific news. Investors seem to be cashing in on their profits. Microsoft is down $79.3 billion or 2.4% on reporting that the company bought 500,000 NVDA Hopper chips in 2024 with no clear plan to monetize them. Tesla down $48.7 billion or 3.5% on news of a recall impacting 700,000 vehicles. Amazon is down $26.7 billion or 1.1% on no specific news. Note that 10,000 employees or less than 1% of its workforce are currently striking with the support of the Teamsters Union. Home Depot down $24.2 billion or 5.8% on no specific news. Exxon is down $21.8 billion or 4.5% on no specific news as well. Blackstone is down $21.3 billion or 9.3% on no specific news. Lilly is down $20.4 billion or 2.7% on no particular news. Note that the company's Zepbound drug has been removed from the FDA's list of shortage drugs and that the FDA FDA has also approved the drug use for sleep apnea. Chevron is down $19.8 billion or 7.2% on no specific news. United Health down $18.9 billion or 3.9% on continued criticism of the company following the recent murder of one of its company executives. This week, there was one change announced to the S&P 500 that will be effective on December 23, 2024. Catalent, up 44% over the past year and will be replaced by Lennox International, up 42% over the past year. Novo Holdings has acquired Catalent in a deal that was closed on December 18th. Q3 2024 earnings are done and next week will be a quiet one, with 15 members releasing earnings last week and no companies left to report. No S&P 500 members will release earnings during the week ending December 27th, 2024. Which company do you think will top the list next week and why? Let us know in the comments below and subscribe to our weekly updates. To find out why Broadcom and Alphabet were up last week, you should watch this video next.